I'll be moderator on this call. By sheer coincidence, I'm also a metals and mining analyst at Sova Capital. Within the next 3.25 hours, we'll see and hear the presentation from Anglo Asian Mining, followed by Q&A session. Today with us is Bill Morgan, CFO of the company. And necessary disclaimer, this call will be recorded, so please keep your profanities to absolute minimum. And now, without further ado, I'll pass the floor to Bill. Bill, floor is yours.
Well, good afternoon, everybody. My name is Bill Morgan, and I'm the Chief Financial Officer of Anglo Asian Mining. This presentation is broadly in 3 parts. The first few slides are an introduction to the company for all of those who are not actually familiar with us. It's really just an introduction. Secondly, I'm going to talk about a very major transaction that we recently announced with the government of Azerbaijan. This transaction considerably expands our footprint in Azerbaijan and is really transformative to our prospects. It will help us achieve our ambition of becoming a mid-tier miner. And we define a mid-tier miner as having annual production of over 100,000 gold equivalent ounces. I'm going to finish up with a few slides on where we see our future opportunities for growth and talk about Zafir, a new deposit which we've recently discovered. As you can see, we produce gold, silver and copper. Our operations are currently all in Azerbaijan, where our company is based, and I'm speaking to you today from Baku. Okay, that's the disclaimer. Okay. We're a long-established company in Azerbaijan. The original contract granting a company mining concessions was signed in 1997. The company was floated on AIM in 2005 and first produced gold in 2009. We're very well positioned in Azerbaijan as the only significant private mining company. The only other significant miner is Azagold, who are a government entity. We have excellent relations with the government, as the recent transaction demonstrates. We have stable production for multiple mines at our Gedabek site, and I will say a few more words about Gedabek later. We have a low cost of production, although this has increased this year due to inflationary pressures. We are financially strong, being profitable, debt-free, cash generative, and have paid a regular dividend since 2018. Okay. Here is a slide giving you a little bit of information about our ownership structure. We've been listed on AIM since the company's flotation in 2005. There's just over 114 million shares in issue, which gives us a market cap of around 140 million. Our capital structure is completely clean. Only ordinary shares are in issue, and there are no outstanding options or warrants, etc. There are also no outstanding employee share options. It's a completely clean capital structure. The shares are tightly held with Reza Vaziri and Governor Sununu, the company's founders, holding 29% and 9% of the shares respectively. Together, the directors and senior management hold in total 42% of the shares. One interesting fact not evident from this slide is that the flotation to pay creditors, but there has been no significant dilution of shareholders since flotation. We think this is highly unusual in the junior mining industry. Okay, here is a slide about our board of directors and senior management. As I said, the company was founded by Reza Vaziri and Governor Sununu, who still serve on the board. Reza is a very prominent businessman in Azerbaijan who spends the majority of his time here and is very much a hands-on CEO. Together, we have literally hundreds of years of general business experience and specific experience in the gold and copper mining industry. Okay, a little bit about Gedabek. Gedabek is the current heart of our business, and production from this contract area has built up the company over the time since its foundation. The main production has been from its open pit. However, we discovered Ugo in 2016, which has given us additional production, although Ugo was depleted last year. We've also gone underground with the Gadir mine, and its underground workings have now been extended to under the open pit and a second portal open. So therefore, we're mining from both open pit mines and underground mines. We produce copper concentrate and gold doré using flotation on both tank and heap leach. There are no issues selling our products. Gold doré is exported to Switzerland and metal traders collect our concentrate at site. Gedabay has excellent infrastructure with easy access over metal roads. It has power from the grid and it processes its own fresh water. There's also a large supply of local labour who we found to be excellent in quality. Okay, to bring you up to date on our current performance, we've recently released our half-year results to the end of June. We produced 32,171 gold equivalent ounces, which was slightly down year on year due to the exhaustion of Ugo last year. Also, the production mix is changing with the proportion of copper in our production increasing. Our all-in sustaining cost did increase year on year from $743 per ounce to $848 per ounce. And like many businesses, we're starting to experience some cost inflation here in Azerbaijan. We've seen notable price increases in the price of imported reagents, and there's also been a 33% increase in diesel. We're still financially very healthy, and we ended the period with $37 million in cash and no debt. Last year was very difficult as we had to cope with significant restrictions due to COVID and the conflict with Armenia. Despite all of that hardship, we recorded record results for 2020, of which we are very proud. Those days are fortunately behind us, and COVID is not now an issue in Azerbaijan, and the country is just functioning normally. The initial mining license for Gedabek was until March 2022. The company had an option to extend the license for 2 5-year periods, and the first of those 2 5-year extensions was recently granted, and the license now runs to March 2027. We can extend this for a further 5 years. The extension was routine and demonstrates our excellent relations with the government. Well, that finishes my sort of brief overview to the company, and let's now talk about the recent transaction that we've concluded with the government. Okay, to give you a little bit of background to the company, the original contract in 1997 granted the company 6 contract areas, of which only 3 were accessible, as the other 3 were in territory controlled by Armenia. Last year, the 3 contract areas in territory controlled by Armenia were restored to us following resolution of the conflict with Armenia. So therefore, before the transaction, we thus had 3 active contract areas and 3 which we now had effectively just acquired. The transaction grants us 3 new contract areas, and the company has agreed to relinquish 1 contract area previously in Armenian-controlled territory. This means we will now have 8 contract areas in total. There was no acquisition cost payable for the new contract areas. Following a review of our existing contract areas and following very intensive discussions with the government of Azerbaijan, which took place over a long period of time, we were granted 3 new contract areas, of which 2, Garadak and Haha, will infill 808 square kilometers of territory between the existing Gedabek and Gosha contract areas. So Garadak, Haha, together with Gedabek and Gosha, will create one continuous territory of 1,408 square kilometers. Garadak contains a known porphyry copper deposit with near-situ resource of over $3 billion worth of copper. This is over 300,000 tons of copper. Haha also shows significant potential, as it is likely part of the same mineral system. The 3rd new concession, Demirli, is adjacent to the existing Kizilbulag contract area in the Karabakh Economic Region. The transaction is subject to the ratification of the Parliament of Azerbaijan. We're not expecting that this will be anything but routine and is likely to take only a few months. And as I said, we relinquish one contract area, which is the Sudalit contract area. Okay. Here is now a map showing what our contract areas will be following ratification of the transaction. The three contract areas in blue, which is Gedebek, Gosha and Ordubad, are the contract areas that we originally acquired in 1997 and which we've been exploiting since the inception of the company. Kizilbulag and Vejnali were also contract areas which were part of the original 1997 contract and have been recently restored to the company following the end of the conflict with Armenia. The three contract areas in green, which is Garadak, Haha and Demirli, are the three new ones which are awaiting parliamentary ratification. You can see at the top left or around the Gedebek site that we now have a significant presence in that area. Together, these contract areas total 2,544 square kilometres, which is just 3% or just under 3% of the entire territory of Azerbaijan. One other beneficial thing which came out of the resolution of the contract is that if you look at the bottom and you can see, or the bottom of this map, you will see Vejnali is separated from Ordubad by Armenia. Ordubad is in the Nakhchivan enclave. As part of the resolution, the government and Armenia have agreed that they will build a road between Azerbaijan proper and Nakhchivan, and this will obviously be beneficial in that it will give us access to Nakhchivan by road. Okay. Well, that's really an outline of the transaction that we've just done, and now a little bit about our growth strategy. The transaction with the government, together with our existing successful exploration program, is presenting the company with several opportunities to grow. In the medium term, we can start production from new discoveries at Gedebek in the next couple of years. We can also commence production from existing mines in the restored contract areas once we get access. Longer term, we can develop the Karabakh deposit, and we also have a large amount of territory to explore. We feel, given our current land holdings, we have enough work to keep the company going and in production for many, many years. Okay, this is a slide about the current exploration targets at Gedebek. Gedebek is 300 square kilometres and we have a long-standing exploration program. The exploration program has been successful with the discovery of Uga and the Gadir mines, which we've been mining, and the recent Zafir deposit. I'll talk about Zafir separately. Current targets is Avshankli, which is at the northern border of the Gedebek contract area. And we feel that there is potential there to produce next year from a open pit mine. This will be clean oxide ore, which will be very easy to process. We also are looking at Gilar. We've got 2 rigs working at Gilar at the moment, and we feel there is a potential for production there in 2023. This will be from an open pit or potentially from an underground mine. Given the recent discovery of Zafir, we're not actually focusing much on Ugol because we're using the drill rigs for the Zafir deposit. So we think that there is good potential for further production from new mines from the Gedebek contract area in the next year or so. Okay, Zafir is a recent discovery at Gedebek, very close to our existing plant. In the picture to the right, you can see the exploration workings cut into the hill with the Gedebek plant in the background. We recently released a maiden resource, which comprised 51,000 tonnes of copper, 82,000 ounces of gold and thousand tonnes of zinc. We plan to publish its ore reserves in the first half of next year, and we will start constructing the mine next year, with production starting in the second half of 2023. We envisage opening a portal, constructing a decline, and the currently preferred mining method is semi-bulk sub-level caving. We're currently computing the necessary investment to get this mine built and equipped properly, and at the moment we are awaiting the quotes for the necessary equipment and generally putting all of those figures together. We think it will have a 7-year mine life, producing around 7,500 tonnes of copper, 6,000 tonnes of zinc and 10,000 ounces of gold annually. This will equate to approximately 60,000 gold equivalent ounces of production per annum for 7 years. We're still looking at processing options. We could easily use our existing flotation plant, but it would utilise all of its capacity. Given that we have other sources of ore at Gedabek, which we can use, we may not want to do this. So we may also look at building a dedicated flotation plant to separately handle the ore from this mine. This would make sense because at the moment our flotation plant only produces a copper concentrate, and we would need a flotation plant that would produce both a copper concentrate and a zinc concentrate. So that's a little bit about Zafir. Okay, this is a little bit about Gawada and Haha. As you can see, the Gawada and the Haha concessions have basically melded this into one contract area, and the Gawadak concession has a Soviet resource of around 300,000 tonnes of copper. And this resource has been explored subsequent to Soviet times by various Azeri entities, and we are able to obtain all of that data, which we will obtain in due course. Our plan for this is that once we have that data, and once the concessions are ratified, we will immediately start firming up all of that data, doing any necessary exploration to produce a JORC mineral resource for that deposit. We believe that will take around 12 months to 18 months to produce that to a JORC standard. Anecdotally, we have heard that there have been mine designs done for this deposit, and that envisages a large open pit, which is economic. Whether that will be our preferred option or not, we will have to wait until we've done all our work in terms of producing the ore reserves. We think that we are absolutely, ideally sited to exploit this deposit. It is literally just up the road, and therefore we feel that this is a very exciting opportunity. So we think this is a great addition to the company's portfolio. There are also some deposits or some discoveries which I've talked about, such as Gilar and Abshankli. They are actually at the northern boundary of the Gedabek contract area, and we feel that these will extend into the Haha concession. So again, we feel that this is a very good addition to what we're doing. Okay, the other three contract areas are in territory previously occupied by Armenia. The Kizilburak Demirli contract area forms one continuous territory hosting a Demirli copper molybdenum mine and plant. The mine becomes ours, and we will have the right to use the existing plant. There are currently Russian peacekeepers present, and we are waiting for the government of Azerbaijan to grant us access to that area. The Demirli mine, located within this concession, is a substantial mine. It was worked prior to the conflict, but there is currently no mining going on, and various reports that have been published say that the mine contains maybe up to 275,000 metric tons of copper. That was a few years ago, and obviously we have no knowledge of the mining that's been carried out from them until date. There is an intact plant at the mine site, which was built by the Valex Group, and they claim to have invested $130 million in it. And the Armenian government have announced that the mine contains enough reserves for 25 years. So obviously we will wait for us to be allowed to be granted access to this region, and then we will obviously send people in there and make an assessment of exactly what we have and what we can do with it. So that is waiting on the government. Vejnali is a slightly different animal to the Kizilbash Demirli contract area, because it's in the formerly occupied territories and it's actually not in Karabakh proper. This means access is not so difficult, and we have already visited the area. There are some old mine workings and processing facilities, and we are currently agreeing with the government a list of about 50 people who will be able to access that area. As soon as we've got that agreed with the government, we will send them in, and they can start assessing again what we have there and how best to exploit it. Obviously, I've been talking about existing mines and existing deposits, but we also feel that there is a large upside to exploration within the contract areas in the restored territory, or the restored contract areas. And, you know, we think that, you know, this is a very mineral-rich region, and we think there is lots of gold, copper and zinc targets. The geology is very favourable. There's lots of anomalies about. So again, we think we've got a lot of potential within these contract areas that are either being restored, or in the case of Demirli, has been recently granted to the company. Okay, so that's the end of my presentation. This is the investment case for Anglo-Asian. We think we've got an excellent investment case. You know, we are an established company, we're cash generative, we have no debt. You know, we are very well established in Azerbaijan, and we are the first mover here. We have low cost. You know, we're financially very robust. You know, we are a regular dividend payer. We've got a great team here who can get things done very quickly. And we see now, over the last year or so, what with our exploration program and with this recent transaction with the government, that, you know, we've got some exceptional growth opportunities ahead of us. So we think this is a great company, and we're all looking forward to executing on all of this potential.
Thank you, Bill. Many thanks for a very informative and interesting presentation. Now we move into Q&A part of the session. Dear participants, you can ask your questions in two ways. You can either raise your hand or type your question in the Q&A panel. Both features are located at the bottom of your Zoom application. While we're pausing for a moment, allow our audience to formulate their questions. I'll read a few questions we already received from YouTube stream. If you don't mind, I'll read them one by one.
Okay, well, read them one by one, and then I'll answer it after you read the question, obviously.
Sure. Question number one. Does the company expect production numbers to fall further until the new concessions are brought into production?
Okay. Our intention is to maintain stable production. Unfortunately, I cannot give any more information about next year's production for two reasons. Firstly, we are still evaluating the production to come up with the guidance. And secondly, that this is a social media stroke YouTube channel. And unfortunately, it's really not a forum where we can start giving out production guidance. That would need to be done formally to the market through an RNS. So that is life, unfortunately. But as I say, you know, it is our intention to maintain stable production while we're bringing in new production from Zafir and the rest of the stuff that we've acquired.
Thank you. The next question comes from Paul, who's asking, when the company was floated, the initial focus was on Ordubad. It's got huge potential, but seems difficult to progress. Are you looking at options there?
We think that Ordubad has got significant potential, and the ask of the question is correct. That was the initial focus of the company. There are some targets there which show some very good indications that there may be some porphyry deposits down there. We have had quite significant geological exploration going on down there, but unfortunately this year and last year we've not done much geological field work at all. And the reason for this is because of COVID, we've been unable to access the Nakhchivan enclave, which is where Ordubad is situated. So it's taken a little bit of a position on the back burner given everything else that has been going on, but we still feel that there is good potential there, and once we can get into Nakhchivan, we will, start up the geological field work and the exploration again.
Very clear. Next question comes from Olivia.
Bill, thank you. That was a fantastic presentation, very clear. I wondered, please, what's your outlook on cost dynamics for second half 21 and for 2022?
So you're not very clear. What is our outlook on what?
What's your outlook on cost dynamics for second half 21 and for 2022?
On our costs?
On your cost dynamics.
Okay, on our cost dynamics. Sorry, you said the internet connection is not wonderful here sometimes.
Sorry.
As I said, we are experiencing some cost inflation, and that has affected our all-in sustaining cost, which has gone up a little bit. We are hoping that we've seen the worst of it, and therefore that we will be able to maintain our costs around about the 840, 850 all-in sustaining cost level. We've not seen anything more significant, but anything can happen in the world. But as I say, at the moment we're hoping that the all-in sustaining cost that we encountered or we incurred in the first half of the year, what we'll be seeing in the second half of this year and next year.
Thank you.
Thank you. The next question comes from Sergey.
Hello. Yeah, thank you very much for the presentation. I have a very general question per se. Basically, you are the company with a market cap around $180 million, with quite a stable free cash flow, positive numbers I believe for the last several years, and quite a comfortable debt position. My question is that, based on the current share price, what's the company's view on being public these days? Because basically, looks like although you are quite expensive on a PE multiple, on a EBITDA multiple, you are quite cheap. So my question, do you really believe that it's justified? And what is the long-term strategy of the shareholders and the management about the being public company? Thank you.
There's two issues there, or two questions there. One is what is our attitude to remaining a public company, and the second is what is our attitude to the current level of our share price. Our attitude to remaining a public company is that we will remain a public company. There's been absolutely no discussion whatsoever about taking the company private or anybody acquiring us or anything else. So at the moment, we are a public company, and we tend absolutely to stay that way. I think regarding the share price, I think I mean, every finance director feels his company is undervalued. I mean, that is just natural. It's all part of the ego of being a finance director. There are some specific issues with our share price, which we feel may be holding it back a little bit, which is the very low liquidity in our share trading because of the fact that the company is so closely held. As you're aware, you know, it's very difficult now for a lot of professional fund managers to buy into companies with low liquidity because of the Woodford scandal, and it would be very difficult for them to acquire a stake. And, you know, there's lots of brokers going around saying, you know, we're doing a placement, you want to buy some shares at a 15% discount, etc., etc. So, you know, we do not need to do a placement at the moment. Obviously, we're cash rich, and there's absolutely no intention to do one. And we feel that that may adversely affect the share price, but that is a structural issue of the company, and at the moment we are happy to live with it.
Thank you for the answer.
Thank you. We're moving to the next question. Why has proposed production at Avsanchi been delayed?
I don't think it has been delayed. I mean, we announced back in May 2020 that we would commence production next year, and we are still saying that we will commence production next year. So it is not my understanding that we have said it will be delayed.
Okay, the next question comes from Aaron. Are you looking at potential joint ventures to help exploit the contract areas?
No. We feel that we have sufficient management expertise and financial resources to be able to do all of this on our own.
Thank you. Next question, I'll take the opportunity to ask. Your asset Gedelbeck, you published a maiden resource statement in May. What would be your sort of best plan in terms of going to PFS and then further into feasibility study in terms of timing and then what are the milestones? Is there any restrictions? Is there any conditions that has to be satisfied before you move on?
Sorry, can you repeat the first part of the question? Again,
yeah, your asset, Gedelbeck. Gedelbeck?
You mean Gedabay?
Yeah.
What, our open pit mine at Gedabay, or?
Your Gedabek, Zafar maiden resource.
Oh, Zafir.
Yeah.
Sorry, Zafir. We produced a maiden resource of Zafir recently, correct?
Yeah. What is the timing taking that further? Okay,
well, I did explain that on the presentation, but just to reiterate, we've already produced a maiden resource. We plan to produce the ore reserves in the first half of next year, and we will start mine construction in the first half of next year. And we are planning to bring the mine into production in the second half of 2023.
Okay, very clear. Next question comes from Dennis. Do you consider M&A, or was somebody's target for M&A previously?
Okay. In terms of us entering into M&A, which would effectively be acquired, we have not considered any transactions. I mean, there was a rumor going around a few years ago that the government was thinking of buying us, but that was nothing more but rumors. Obviously, given the shareholder structure, if we did decide to undertake any M&A, it would have to be with the approval of the shareholders, given the shareholding structure, but as at the moment, there is absolutely nothing that I'm aware of that is going on. In terms of acquiring something, we would be open to that. I think we have got ambitions to be more than just an Azeri-based company. We think that would do our share price a lot of good because multi-jurisdictional miners tend to carry a higher valuation than single country miners because obviously it spreads the political risk. And we've stated that we have been looking at opportunities, and we did actually attempt to do an opportunity in Ireland, which unfortunately fell through. So, you know, we are open to opportunities to do any M&A outside of Azerbaijan if we felt that it was a worthwhile opportunity. Obviously, we're not going to go and just acquire something for the sake of acquiring it to say, hey, you know, we're in this country, but, you know, we are open to offers. And interestingly, as we get well known, we are getting more and more people come to us to say, look, you know, we have an opportunity for you. 2 or 3 years ago, we had to go looking for them, but now, you know, we're getting approached very regularly with, you know, do you want to buy this in Ukraine, or do you want to buy that in Kazakhstan, or we got a deal for you here in, you know, X, Y, and Z. You know, we are getting a lot of this. So we are open, but, you know, we're very careful about what we look at and evaluating it.
Thank you, Bill. The next question comes from Aaron, and yeah, it's very interesting how you're going to tackle that. Why do you think there is such a disconnect between the current value of the company and its potential across all contract areas?
As I said, you know, I feel the company is undervalued, but as I said, you know, every finance director feels his company is undervalued. The value of the company is what it is. Obviously, you can have a lot of potential, but obviously you've got to execute on it. And I think that once we start executing on some of the potential, that will be extremely beneficial for the share price. And the issue which I've also just recently talked about is we feel that to really get some good share price appreciation, you know, we need to attract a different type of investor. You know, our shareholder register, other than the directors, is all mainly private shareholders, retail shareholders. You know, to start getting a wider base of shareholders, which would be, you know, professional money managers such as family offices or institutions, you know, they would need to see a lot more liquidity in the shares. Thank you.
Questions keep coming. Do you expect there to be any changes to the current PSA agreement?
No. No. I mean, the new contract areas that we're acquiring, the 3 contract areas, they will actually be incorporated into our existing PSA, and that's it. So no, the answer is no, we're not expecting that.
Okay. Next question from Dennis. Any reasons for being debt-free and increasing cash position?
Well, obviously, we only go out and borrow money when we need to borrow money. We feel that given the opportunities that we're looking at, we're going to have to start making some significant investments. In Zafir will be one significant investment, and obviously in the next 2 or 3 years in Garadak. So although we are currently, you know, very well cashed up, we can see a time when we will need to start investing in those opportunities. So we're quite comfortable with the cash position at the moment.
Thank you. Bill, you mentioned your dividends. Could you remind us of your dividend policy? Because I probably missed that part.
Our dividend policy, which was set a few years ago when we initially paid the dividend back in 2018, was to pay 25% of free cash flow, which was a very conservative dividend policy. We've actually, given our cost increases and the recent slight fall in production, we're now actually paying a little bit more than 25% of our free cash flow. Last year, we paid an 8 cents regular dividend together with a 1.5 special. That was before we knew about the conflict in the new territories. And this year we have just declared an interim dividend, which is at the same level as of last year. So I think that's as much as I can say without making forecasts for full year dividends. So we have paid an interim which is at the same level as of last year.
Sorry, Karen?
So we will pay. We haven't paid it yet. We'll pay it in November.
Okay, understood. Next question from Francis. What are your capital requirements for developing the existing and new assets? And can you fund these from existing cash resources without affecting the dividends or needing to raise more capital?
Okay, again, there's a couple of questions there. The first question is, what are the capital requirements for funding some of these new mines? I cannot give an answer to that for two reasons. The first reason is that for Zafir, we're still doing the work. As I said, we are putting together a budget for developing that mine. And we're actually at the stage now where we are acquiring, or we are getting in quotes, all of the underground equipment, etc. So that is very much a work in progress, and we're hoping to get that work completed fairly soon. Obviously, that's part of the normal management and, you know, running a company. So that is the answer on Zafir. And on some of the new concessions, such as the Garavak deposit and Damirli, really until we've actually acquired these contract areas and got our sort of arms around exactly what's needed, you know, we obviously won't be able to answer those questions. In terms of the some of the smaller developments at Garavak, such as Shankly and Gilar, they will not be so big. They'll just be developing a mine. They'll probably be single-digit dollar amounts in terms of millions, just a few million that we can obviously afford. So we are just really waiting and seeing on Zafir and waiting to get, you know, full ownership of what we're acquiring. In terms of accessing capital, we do not think that that is an issue. We have got extremely good relationships with banks. I mean, we've got a $18 million undrawn line of credit with a local bank, which we fixed up fairly easily. And we could also go out and borrow further amounts. And also, we think that the banks will be extremely helpful to us if we need to put any capital into Karabakh or the former occupied territories. Obviously, the government is extremely keen to get economic development going in these parts of the world. And if we come up with a project saying we need to invest a certain amount of money to get some economic activity and get a mine going in Karabakh or somewhere like Zangilan, you know, not only will the banks be supportive, but the government will be very supportive. And also we have the options of necessarily doing an equity fundraise. So we feel that we've got a good range of options to raise further capital, you know, as and when it's required.
Thank you. Next question from Francis. Given the scale of the opportunities within Azerbaijan, why would you contemplate international expansion? As
I've just said, I think we have ambitions to be more than just an Azeri-based company. We think it would be very good for the company to demonstrate that it can do something outside of Azerbaijan. And also, as I've also just said, that we feel that the marketplace is a higher valuation on multi-jurisdictional miners. But, you know, we do have an awful lot of work to get on with Azerbaijan. And, you know, although we are looking, as I've just said, at opportunities outside of Azerbaijan, you know, we will be very careful in terms of what we ever got into.
Thank you. Next question from Aaron. So how are you going to achieve more liquidity with the shares?
The brokers would tell us that we would either need to do placements to start placing shares with institutions to raise capital. And obviously, given the fact that we're fairly cash rich at the moment, that is not something that would really make a lot of business sense. Or the founding shareholders who hold significant stakes, such as Reza and the governor, could start doing secondary offerings of their shares. And obviously you would need to ask them what their intentions are towards that. But given that, you know, over the life of the company, they have not done that.
Thank you. Next question from Sergey. Sergey, your line is open.
Yeah, sorry, just very short follow-up question. Given the current, probably you already mentioned it, but I missed it, but given the current production capacities and facilities, what is approximate annual capex spending will be for the next, let's say, 3 years on average?
Well, you're asking us, so again, it's not a good line. What our capital expenditure on new production facilities will be over the next 3 years?
No, on the current one, not on a new one, just current one as it is. The Gellerbeck site is a fairly mature site. We have made a lot of capital investment in that site over the last 10 years. We've built a agitation leaching plant, which is you know, tank leaching. We've built a flotation plant. You know, we've built electricity substations, water treatment plants. So it is pretty mature, and just to maintain that operation, you're just looking at really replacement capex. You know, you're not looking at, you know, tens of millions of dollars. You know, you're talking, you know, maybe $5-10 million a year maximum. There's no big capital expenditure projects coming up on our existing operation, with the exception of the tailings dam. We are now looking at having to build a new tailings dam because our existing one will be running out of capacity at the end of next year. So we may need to spend maybe, I don't know, again, $5-10 million on a new tailings dam. We're still looking to see what site we would use and how we would build that dam. But on the existing, you know, facilities, without any expansion, we're not looking at, you know, a huge amount of money needed to keep them going. So it's a high single digit, yeah, in $1 million.
I would say that, yeah. I would say somewhere between 5 to 10 million a year.
And what is the decline rate of the production of the current assets? Sorry for missing this number.
Sorry, what is the
declining rate of the production on the current assets?
What, the depreciation rate?
Yeah, not depreciation, the production. What will be the production next year versus this one?
As I said, I can't comment on giving guidance for next year's production, because, as I said, we are still looking at it, and this is not a forum where I can make such predictions. But as I say, our intention is to maintain stable production at the level of what we've been doing over the last few years.
Okay, thank you very much.
Thank you. We coming back to the questions from the web. Panda, when are we to expect any news on current drilling results, especially at Gosha?
We regularly report our drilling results on the half year and the full year. So every 6 months we report our drilling results. We've obviously reported the drilling results in the 6 months to the end of June. So the next full report on drilling results will be for the 6 months to the end of December, which we'll be reporting probably around about February of next year. That is just on the routine exploration. Obviously, if something very significant happens, we would put out an RNS, or we maybe include it in a quarterly update. But just for the routine drilling results, the next set will be for the 6 months to the end of December, and they'll be coming out maybe February of next year.
Thank you, Bill. And I'm very pleased to announce there is a last question in this session coming from John. What is the mine life of Zafa expected to be?
Zafa, as I've said in the presentation, 7 years.
7 years. All clear. I think that's enough of grilling. It's been by far the most intensive session in our Gold and Precious Metals Day so far. Thank you very much for excellent presentation and very informative Q&A session. Dear participants, if you have any questions, you can direct them to Bill or through me, whatever way you prefer. With that, I might thank everyone, and